Hello, my name is Bill Gladstone, and I am with the Bill Gladstone Group of NAI-CIR, based here in Harrisburg, Pennsylvania. Today I will be interviewing two local experts about what they have seen in the Harrisburg office market over the past 90 days, and what they predict we will see to come in the fourth quarter of 2011. Our first expert is Serena Schultz, Vice President of National Leasing and Sales with Caro Real Estate Services. Caro is a full-service real estate firm based in Albany, New York, with additional offices in Pennsylvania and Missouri. Here in Harrisburg, Caro represents buildings with approximately 360,000 square feet of office space. Our second expert is Alex Hartzler. He is the managing partner with WCI Partners, a real estate investment fund primarily focused on urban real estate development projects, including adaptive reuse, restoration, and conversion of urban structures. WCI currently has over $25 million under management, as well as a 50,000 square foot office building under construction in Harrisburg's Central Business District. Welcome to the show, guys, and thank you for being here today.
Thank you for having us.
Thank you.
Okay, and with that, why don't you and I moving into our first question. Our market is generally a market that shows vacancy between 7 to 9% for A space and probably 10 to 14% for B space and B plus space in the current condition that we're in right now. How do you think your current vacancy is, and how does it match up with that as far as your office portfolio, and why do you think that is so? And why don't we start with Serena?
Well, we've had an interesting twist in the past couple weeks. Prior to September 1st, we could have easily said our Class A market had a 6% vacancy rate, and our Class B had, unfortunately, about a 51%. However, we just recently lost our largest tenant here in the area with a total of 125,000 square feet of all Class A space, which has now put us at the 51% across our entire portfolio here in Harrisburg for a vacancy rate.
Now that's quite a large amount, because Harrisburg typically will absorb maybe about 150,000 square feet in a single year, and you've managed to lose, unfortunately, 125,000 square feet also in a single year. So just to understand how large a difference that makes in our market and what that means for the future coming up. Alex, how about the vacancy rate with your portfolio when we say 7 to 9% perhaps in the A space and maybe 10 to 14% in the B space?
Yeah, we're in a unique position, Bill. We have mostly to date B space, in which we're 100% occupied. We have several properties that were former townhouses on State Street, and they are essentially full, but that's only in the 10,000 square feet. So we don't have a lot of B space. We are, as you mentioned, building 50,000 square foot of Class A office space for a law firm and another client right on 2nd and State 1 block from the Capitol. So that's a build-to-suit, essentially, project, which we are delighted to be participating in, but that would not be possible without that anchor tenant.
Very good. The other thing to keep in mind too, and what we try to do here so we get a little diversity on this whole program today, Serena and Caro are in the 8 buildings in suburban areas. They're on the East Shore and on the West Shore, not located in the city. Alex's projects are all located in the city, and I think you'll find that, as they were just talking about the vacancy rates, the projects that the Bill Gladstone Group represents also, where we have a portfolio of different owners, probably about 500,000 square feet of office space, we find that on the West Shore, the rates are probably closer to 7 to 8% for the A space, and they're higher on the East Shore. And on the B space, it's about the same thing. The B space, there'd be 10 to 12% maybe on the West Shore, and about 12 to 14% on the East Shore. There's more vacancy there. Again, going against what Serena just told us, but again, keep in mind, that's one tenant in a very large space, not typical of the market, but unfortunately will have effects on the market. As far as the city goes, the city typically runs about in the middle of that range. So if you have no vacancy and you're ahead of the market, which would probably be about 12% in the city, and on the A space, you're fortunate you've got the build-to-suit, which will give you a 100%, I guess, till you're up and running. But you've also got another tenant. Now you have a 50,000 square foot building.
Yes.
And that's going to give you 3 floors with your law firm tenant.
Right, it's interesting, we have 3/4 of the law firm tenants, they've taken 30,000, we had 2 available, and we've had a lot of interest in those first 2 floors. We are very close to signing a lease for the remainder of the space. We have a little 4,000 square feet of expansion space for the law firm, which will remain on a year-to-year basis, but even that space has been spoken for. So we believe we will open 100% full September 1 of next year. However, I would say, in general, we are approached quite often to acquire more space, and your figures are right on, and perhaps even a bit low. There's a lot of B space available in Harrisburg, for sure.
Very good. What do you predict? What do you think is going to happen as we move into the fourth quarter, as far as perhaps vacancy? How do you see vacancy coming, and how do you see net absorption for the fourth quarter as we move into the first quarter, perhaps of 2012? Now, keep in mind the net absorption here in Harrisburg probably has been, I'm going to say, in the last quarters, maybe about a negative 20,000 square feet a quarter, plus or minus. I mean, when I say Harrisburg, it's suburban and it's urban, but overall, we're probably losing space. So what do you think is going to happen to that? Is that going to increase, decrease? Are the vacancy rates going to increase or decrease? Any comments, Serena?
I'm going to have to hope, given what has just happened within our portfolio for third quarter, that fourth quarter vacancy should decrease a little bit. I know we are in the process of signing a couple of large leases that will positively affect the market, and we see that fourth quarter rush coming on where everybody wants to get the deal finished before the end of the year. So I do think vacancy rates will drop slightly. I don't think we're going to see any huge drastic changes.
Very good. Alex, comment?
Yeah, I think that what we're seeing in the city, again, is maybe a different type of client, somewhat smaller. That's some tech clients, some internet-related clients who want unique space. So if we're able to offer something that has some character to it, that's maybe more open, has something different to it, there's demand for that. But your common sort of blah, nondescript space in the city or anywhere, I think is going to be challenged, quite frankly, because I think that your larger companies are contracting. Your smaller companies are where the growth is typically, and I think those smaller companies, particularly with younger leaders, want something that's unique in their space. So I think if you can offer that, or at least we've found that you can gain something. For instance, we were able to, after several years of sitting vacant, we were able to sell a 6,500 square foot townhouse office space on 2nd Street in the past year to a lobbying firm headed by one 30-something and one like 20-something owners who loved the uniqueness and character of the space.
Having said all that, let's try one more question and see if we can end this on a positive note for the market. 2007 was a great year. I mean, everybody made money, it seemed like, and a lot of office space was leased, and everybody seemed to be, always refers to that as a good year. When do you see, and I'm going to say when, not if, or will we, but when do you see us going back? Because I think the market's cyclical. To me, it always goes back. You always have your highs, you always have your lows. I think we got hit extremely hard this time simply because there's a lot of reasons for that. And they're not just here in Harrisburg or in the United States, they're all over the world. But assuming that we can change and come back, when do you think we're ever going to get back to, when do you think we're going to get back to the times we had in 2007? And Alex, I'm going to start with you because you must be the eternal optimist. You are building a 50,000 square foot building under construction now, you just set the steel, in a city that just got ravaged by a flood. That flooded all the way up to 6th Street. Your project's on 2nd Street, so the flood went by through you, in a city that's trying to fight off bankruptcy, and you are actually putting up a building. So when do you think we're coming back to where we used to be?
Yeah, I mean, that's a tough question I don't have my crystal ball, but what we're trying to do there, Bill, I think, which goes back to the unique space, we're building a building that's going to be LEED Gold. So we're doing geothermal, we're doing special windows, we're not putting on solar on the top to start, but we're making that possible. We're putting bicycle racks in, we're putting showers, people can run at lunch, things like that. There are amenities that we are doing to make that building not a decade-long building or a 20-year-long building that you tear down. We're building for 100 years or more, and it should last that long. And so we're seeing long-term trends towards walkable urbanism. People want to be in the city. Of course, we're block from the state capitol. That's not going anywhere. So we think that that type of space, which is interesting for the people who actually live there during the day, there'll be a market for that.
Excellent. So the crystal ball says those are long-term buildings. You're looking more for the long-term, you think, rather?
I think it's going to be tough in Harrisburg over the short term. In the 3 to 5 year trend, if you don't have a tenant, you're not going to build. That's basically the bottom line. You're not going to see any spec buildings go up in Harrisburg. However, I think once we get through this political crisis, and we will, the trends towards that unique space and being in a city is attractive to younger employees, and eventually businesses will respond to where their employees want to work. And so we're long-term optimists about the city. So
you positioned yourself well.
We think so.
Yeah, excellent. And Serena, how about in the suburbs? What do you see as far as when do we get back to 2007 times?
I think it could be a long time, and I'm talking maybe 20 years out. The change we're seeing is that people are moving, a shift to move to work to home. A lot of companies are laying off right now, which is what's affected a good portion of our portfolio. But I think there has been a transition in the everyday work space where people are at home. They don't have to sit in the office under the same four walls every day with their colleagues to get their job done. People can do it on their own schedule. It doesn't have to be 8 to 5 anymore. So I think that's going to take a toll definitely on the suburbs and the office space. I do love the new, trendy downtown. I think that's great, very techy, very cutting edge. And I think he has some great points, but as far as our portfolio, I definitely think it could be a long time out.
Yeah, and two different points of view, really kind of unique points of view, and something that I haven't really heard before, but I think it's very true about the walkable urbanism and about the work from home. I think maybe that as I think about it, that could be here to stay. And I think even in the portfolios that we represent, from different landlords that have asked us to represent them on their buildings, I see some things that's going to take us. I think we're going to reverse, we're going to move out, but I don't know if from what we do for a lot of the people it's going to take 20 years, but I certainly think it could be 3 to 5 years or longer, somewhere in there, to get us back to the times of 2007. Not that the times won't be better than they are now, but I think the times for 2007, those were very good times, and I think it's going to take us a lot of time to get back to that, because the problem right now is global. It's not necessarily right here in Harrisburg or in the United States, it's just global. And when we can't create jobs, if they're just net neutral on the jobs, and I think the other thing that I hear a lot from people is it's the lack of leadership. I mean, people are scared, people are frustrated, things are just not moving forward, and until all these things kind of correct themselves, I think we're just going to kind of linger in the holding pattern that we're in right now. We hope you've enjoyed the presentation of the last 90 days. If you'd like more information, or if you'd like to be in touch with Alex or with Serena, please feel free to contact us. Log into www.billgladstone.com, and we'd be glad to put you in touch with either one of these two individuals. We thank the experts for being here with us today, and we look forward to seeing you on the next segment of the last 90 days in January. Thank you.